Nilesh Shah, Managing Director of Kotak KMC. And 6 years ago, we spoke about how India's weightage in the MSCI index was all set to go higher. China was the dominant one. And look at that tweet where we are just revisiting what he, in a sense, predicted. And in this case, हम हिंदी में बोल सकते हैं, देखो इन्होंने बोला था. So नीलेश भाई आपने बोला था, अब हो गया है.
So, Nikunj bhai, yes, it feels good that we could predict how India will rise and why global savings should come towards India rather than China. Obviously, a lot of work has gone in ensuring this. The reason why we had to engage with MSCI to increase our weight is that a lot of passive funds, almost $2 trillion worth today, follows MSCI emerging market benchmark. And if our weight goes up, we'll receive more flows. All the other active fund managers, majority of them follow MSCI indices. In some sense, it is fair to say, higher the weightage in the index, higher the allocation out of global saving towards your country. If our weights would have gone down, then we would have not only lost future flows, but also people would have redeemed from their invested amount in India. And which is why it was important to engage. And I'm really happy that our regulatory authorities did manage that proactively. And today we have moved from 8% to 18% in 6 years, whereas China, instead of going from 30% plus to 50% plus, is now 25%.
So, Nilesh bhai, my next question is that can we go in terms of weightage in the next 3-5 years as high as China, which was peak 30%?
Nikunj bhai, never say never. And we will all hope, pray, and work towards achieving that. Of course, there are two immediate things which should happen and which should increase India's weight further. One, Korea is considered as part of emerging market. Their president in their election campaign has talked about Korea becoming part of developed market. I hope and pray at some point of time, a $35,000 per capita GDP country moves out of emerging market into developed market. If that happens, then low double-digit weight of Korea will get divided among other emerging market, including India. The second thing which we have to achieve is one of our bank is included at 50% weight in MSCI index. It should be included at 100% weight. Why give discounted treatment? If these two things happen over next 6-12 months, we should see reasonable increase in India's weight. And if luck favors, from the teens, we will go into 20s. And then the gap between us and China will narrow further. And over next 5-6 years, there is a reasonably good chance that if we maintain our economic growth and valuation, then we should be where today's China's weight is.
Okay. I'd like to draw everyone's attention, Nilesh bhai, to the Indian economy. It's at about 4 trillion, plus minus 5% depending on the data cut you look at. The financial market right now are north of $4.2, $4.3 billion, again depending on the data cut and the day you look at. Do you see that in next 3 to 5 years, the financial market economy will be growing at a rate which will be significantly higher than the real economy? The reason why I'm asking this question, Nilesh bhai, is that if India, let's say, doubles in 5, 6 or 7 years, that's the debate, right? 5, 6 or 7, hona to hai. 4 will become 8. But in that journey where the real economy becomes 4 to 8, the financial market economy will achieve that at least a year or year and a half before the real economy doubles. Am I putting like a big picture, simple scenario, very, straightforward for our viewers?
So, Nikunj bhai, in some sense, when our financial market or financial market cap is higher than real economy, it is factoring in the future. The world believes that India's growth rate will be better than its peer. its governance standards will be better than its peer, and probably somewhere not discounted but believed is that green transformation of India will be better than its peers. Today, China is world's largest contributor to environmental issues. The carbon emission is the largest in China. If you look at per capita basis, India is lowest per capita carbon emitter. Of course, China on a per capita basis is not the highest. That honor goes to developed world. Now, we will have to remain lowest per capita carbon emitter. Our growth should happen without damaging environment. If we continue to maintain this trend of growing above our peer group, having governance standards at par with developed world and better than emerging market, and doing green transformation where India continues to remain lowest per capita carbon emitter or in the lowest decile or quartile of per capita carbon emitter, then I have no doubt in my mind that as our economic size doubles, financial market cap or markets will probably remain higher than the economic size.
So for someone who says, okay, this is India's Amrit Kal, I want to stay invested, but markets at an all-time high, valuations at an all-time high, financial markets has already seen a run-up. Could there be a situation where economy will continue to grow, but the stock market could lag the economic return? Could it happen the other way around?
Undoubtedly, even that can happen. If our future economic growth starts falling or faltering vis-a-vis our peers, then certainly the premium valuation which we are getting today in the 20s will not be available. If our governance standards falters like it has faltered in Russia, China, Brazil, South Africa, then certainly the premium valuation which we are enjoying will not be available. So as long as my 3G of growth, governance, and green is better than my peers, financial markets has chance of staying ahead of economic market as people discount future and give higher weight to it. If we falter on any one of this, then certainly financial market will be lower than the economic real GDP.
Thank you very much. 6 years ago, we had a conversation where Nilesh Shah made a case that India actually could see a big change in terms of the MSCI weightage. It will be talk of the town. And what looked like a thought now is a consensus view. That time it was the minority view. Today it is the consensus view. So thank you very much, Nilesh Bhai. Always a pleasure to have you on ET Now.
Thank you.